Buy, sells, real estate. I'm pinning a link to the YouTube channel so that you can see all of us. Unfortunately, LaShonte can only be seen if you're joining from one of our other platforms, not Instagram. So if you want
Not Instagram needs to get with it.
right, not Instagram. Instagram is the only one that I cannot have joined automatically. So if you want to see everybody that's a part of this live, which is going to be LaShonte Harris, you just need to click that link so that you can watch us on YouTube. Okay, so we've got a few people in. Hey, y'all. Hey. We are live. We're live on Facebook. We're live on YouTube. We're live in my Facebook groups. We're live on my Facebook page. And we're live on Instagram. But if you're checking in from Instagram, you will not be able to see LaShonte. So that's why I selected the link for YouTube. If you guys want to check that, you'll be able to see us all. You can make comments and questions and things like that. I'm going to go ahead and get started because I'm not trying to keep y'all for a long time. We're just here for a good time, right? So first things first, if you guys could share, I'm looking everywhere. I should be looking at this camera. If you guys could share this post. If you're on Instagram, before you head over to YouTube, please share this post with some of your friends. All you got to do is click that little airplane at the bottom of your screen. So that people can get these gems that you're about to drop about the contract to close process. So again, please share, because I'm not sure if we are going to save this video. So go ahead and share it with your friends. Click the airplane at the bottom. Thank you, guys. All right, so I'm going to be looking up here. So if you're on Instagram, we'll be looking at my screen up here, which is where everybody else is kind of checking in from. I'm sorry for all the confusion, y'all. But again, I just want you guys to share this post. And then the other thing I'm going to ask is that you just please give us energy, give us collaborative energy so that we can spill the tea on the contract close process. For those who don't know me, I am Courtney Rozier. I own Time Freedom TC, which is a transaction coordination firm where we help busy real estate agents streamline their contract to close process. We help them increase their productivity and their income by taking over all of the paperwork involved in a transaction. So with that, I've been doing this for over 6 years. And my business has grown to a point where I can handle a large amount of transactions without going insane. So I also, I've learned so many things about, just automating my business and things. I made mistakes and things like that, where now I am able to train other transaction coordinators how to do the same. So, and that's through my TC Playbook, which is a hybrid course where I help you launch your own TC business. So one of the biggest concerns that many new agents or TCs have when they're launching their business is, what is the actual process? What will I be doing? What is the process of buying and selling? Even if they bought or sold a home before, how does that relate? As a transaction coordinator, how does that relate to a real estate agent? What should I be looking out for? What is my role in it? Who are the players? So with that said, I was talking to one of my favorite lender partners, LaShonte, and we felt like it would be great to kind of get on a call and just talk about it. Talk about the entire process and how we together collaborate with agents to get their buyers to the closing table. So before I bring her in, let me get a fire emoji in the chat if you guys are ready to talk to LaShonte and hear about the contract close process. I want to just get a quick post check of where we are. But before I introduce LaShonte with Summit Funding, I want to talk really quickly about the TC Playbook. That, like I said, is my hybrid coaching program for aspiring TCs. And it is where I help you launch a profitable TC business in just 5 weeks or less without any real estate experience. Um, we're going to be, by the end of the 5 weeks, you will have built your entire back office for your TC business. You will understand the entire process of what you'll need to do. And you'll have access to an expert, me, along the way to help you. So if you would like to join the course, we will be opening it up. I'm going to be doing a free live training next Tuesday, where I'll be teaching everything that you need to know to launch your TC business using my MAPS framework. MAPS stands for Mindset, Attraction, Processes, and Systems. So to RSVP, all you need to do is comment the word roadmap in the comments below, and a link will be sent to your DM to register. In honor of Mother's Day, I do have a special announcement. I will be gifting someone a scholarship to have free access to the TC Playbook. It is a $1997, that's $1,997 value, and you will have access for free. Just one lucky mom will have access. So make sure you register. All you got to do is, like I said, comment the word roadmap in the comments below. Okay, so with that being said, we are going to go ahead and introduce LaShonte. If you're on Instagram and you just joined, I did put a link to the YouTube live channel so that you can catch her there. Unfortunately, we will only be able to see her on YouTube live, or if you're on my Facebook channels, and not on Instagram. So please click that link if you would like to see her. But if not, if you want to stay on Instagram, you will hear her. You just won't see her. So without further ado, I want to introduce LaShonte Harris of Summit Funding. LaShonte, introduce yourself, bro.
Hello, hello, hello. Thank you so much, Courtney, for having me on. My absolute favorite transaction coordinator, definitely the expert. But my name is LaShonte Harris. I am a loan officer and branch manager. And long story short, I do mortgages. So I get to help home buyers purchase homes, and I also help real estate agents earn more business and more revenue by making sure that their loan process is smooth and that every file goes the way it's supposed to. So I'm super excited to partner with you on this live and talk about some of the craziness that we experience and educate on some things that, they can do to prevent that craziness.
Absolutely. Great. So LaShonte and I have done countless transactions, whether I'm wearing my TC hat, whether I'm wearing my buyer's agent's hat, and even my buyer's hat. She actually was my loan officer when I purchased my home in 2021. She walked me through. She walked as a self-employed individual. We for 2 years planned in advance what I needed to do using income made from my TC business, mind you. Okay, shout out to that. But able to, give me advice on how I needed to do my taxes as a self-employed individual in order to qualify for the home that we wanted. So we have done many transactions together. We've saved deals, we've had buyers bullshitting. We've had a lot. We've run the gamut of experiences. Yes, sometimes. Of experiences. I'm a total professional. I'm the most unprofessional professional, maybe. Very casual.
You know how sometimes when there's an interview and the people are like, "Can we cuss on here?" So I'm like, "We can cuss on here."
Yes, we can cuss. When it fits. What I love about LaShonte is that, just like me, she's a stickler for systems and automations and over communication. Like, I think both of us are pretty much aligned in how we run our businesses. We have back office business talks all the time. And, you know, when I was a buyer, I was literally my worst client. Like, and probably LaShonte.
You may have been my worst client also.
Listen, until you become, you know, in the buyer's chair. And so I have so much empathy now for the experience that they go through. But, you know, she over communicated. She has automations that lets us know at every turn where we are. And, you know, I do the same in my TC business. And on the TC side, when I'm wearing a TC hat and she's the lender, it helps make my job easier because, you know, I'm still going to send out my automations, but two heads are better than one. So even if she, you know, sent something that they're working on the appraisal, then my automation is coming a few days later saying, hey, okay, is the appraisal in yet? So it's like we ping pong together and collaborate to get everybody's goal met, you know, and that's to get to the closing table. You know, both of us serve the same groups. That's buyers, agents. So with that being said, LaShonte, why don't you give the people some information on what the role is of the loan officer? Like, and I always get it mixed up. Like, are you a loan originator? Are you a loan officer? I just usually call you guys the lender, but I'm interested what you consider, because you have people on your team. You have yourself, which is the face, and then you have like the processor, and you have other people. So tell us a little bit about the roles that the lender plays overall, and then kind of break it down of what each person on your team kind of does to help everybody.
Yeah, for sure, because there's so many different terms, right? The loan officer, the loan originator, the loan advisor, all of them mean the same thing. We are the money. So in the transaction, our job is to get the loan approved from start to finish. I do want to go back because you gave me my flowers, and I absolutely have to give you yours because you are correct. We've worked so many transactions together, and I remember in the beginning, and I'm like, who is this that, you know, keeps following up? I mean, the follow-up is absolutely amazing. And like you said, two heads are better than one. So any transaction that I see you on, I am just super excited and love working with you, because if there is something that my team may have missed, or if there's something that we needed a reminder on, I know I can count on it coming from you. So hands down, love working with you whenever you are the transaction coordinator on the deal. And I refer you to any agent that I know is in need of looking for a transaction coordinator. So I'm super excited, like I said, to do this live with you. But let's talk about my job.
Okay.
I always say I'm the money. So the loan officer, you know, our team, our job is to get the financing done and complete in time for the loan to close smooth and on time, 100%. So there are so many hands from the lender side that has to touch a file. So you have, from the beginning at the pre-approval stage, my team who deals with a client when they're just a lead or when home ownership is just a thought. But when we go into contract, you have the contract coordinator, you have the processor, an underwriter, an appraiser. You know, we work closely with the attorneys. So really our job is, while we are underwriting the file, making sure all the I's are dotted and T's are crossed, we're also keeping up with every other department and every other individual that has a role in getting the loan closed.
Absolutely. And we, you know, there are some loan originators that don't have a team and it's just them. But I always say, like, I've had mortgage people reach out to me and say, hey, do you do coordination for mortgage companies? And while I think, so if you guys are out there listening, that could be a great niche, because I don't believe there are a lot of, at least there are not a lot of them marketing themselves as a mortgage TC, a mortgage transaction coordinator, like somebody that can help them. You know, I guess that might be the processor, but
those loan officers need to get their systems together.
Because I'm like, first of all, you guys' jobs is way more stressful than I'm willing to go. I'm not willing, because I know how I am. Like, you know, if I'm with a lender that doesn't have their systems in place and they're going silent and things like that, or they refuse to communicate with the TC or whatever it might be. And then, you know, stuff hits, and it's usually they go silent because they're fucking up. Somebody is messing up. Either the loan is not, you know, the buyer, they've run into a roadblock with the buyer. And for me, we need to know that as a buyer's agent and as a TC, I'm dual. You know, like, yeah, Ashley, exactly. Silence from a lender means that it's a problem, but we can't afford for you to be silent, because our finance contingency is in place not for the buyer to see when they'll be approved. The finance contingency is in place for the buyer that may be declined. So therefore, I don't need you to be silent. If you see a roadblock or a problem, we need to know about that ASAP so that we can terminate the deal if we have to. Like, we have to do whatever we have to do to save the buyer's earnest money. And so silence from a mortgage lender, like, that is definitely a red flag. And that's a quick way for a buyer's agent or a TC or a buyer's agent to not work with you again.
100%.
Yeah. So we talked about, so you told us a little bit about kind of the roles and the parties. So walk us through kind of the timeline of the entire process. So you mentioned when you first get a lead. We don't really have to delve too much into that, but you know, when you first get a lead, you know, you nurture the lead. That's going to be right. Whether you're a loan, a mortgage professional, whether you're a real estate professional, whether you're a transaction coordinator. When you get a lead, they may not be ready to work with you right away. And you have to be okay with that and be able to, and have systems in place to be able to nurture that lead until they're ready. But once they're ready, go ahead and walk us through what happens.
Yeah. So we can start from when the contract comes in.
Okay.
So once the file becomes a contract, and I notice a lot of times our systems will kind of overlap because the first thing that we do is the intake of that file. So we're going to send out our welcome emails, make sure that everybody that's supposed to be in the loop on the deal, we have their contact information. We're going to verify and confirm everything on the contract that we have is correct. Everybody's on the same page. So we do the contract intake as soon as it comes in. And then immediately on my team, we're going to order appraisal and we're going to order title, because usually a file is pre-underwritten. So we know the buyer is good. Most of the time we're now underwriting the property. So that means we need to get the appraisal ordered as soon as possible so we can confirm the value of that home. We're going to get the title ordered so that the attorney's office is in the loop. They know to start working on making sure that the deed can get cleared. So immediately, that's the first thing that we do. Go ahead and get appraisal ordered, get title ordered. We're going to have our consultation with the buyer to make sure that our application is complete. It's up to date. If we need to get updated documents, we'll go ahead and get those things then. And then one of the most important pieces, especially in this climate, is locking that interest rate. Let's go ahead and look at interest rates, make sure that the buyer is 100% comfortable with their payment. At this point, this is when we bring in insurance. So we need to get our insurance agent to quote the insurance. So we're having a consultation with the buyer to make sure they're comfortable with their numbers. They know what their numbers are, and we can move forward. At that point, we submit the loan to underwriting so the underwriter can review everything.
Mm-hmm. And then that's the first round that it goes into the underwriter, and then it comes out, right? And then, you know, almost always a buyer is going to expect to have some conditions. But the beauty that I find in working with you, or just in agents working with preferred lenders, period. If you're a buyer on here, it's not that we don't get any kickbacks. That's against the law for working with specific lenders. However, it is in the buyer's best interest that they work with someone that the agent has a proven track record with. The agent can trust that they can reach out to this lender on a weekend when they're showing you houses, and that this lender will be able to easily pull up numbers and help us craft the perfect offer. A lot of times buyers are like, I think I'm going to use my bank. I have a relationship with them, but you really don't have a relationship with the mortgage part of the bank. You have a relationship for your bank account, maybe not. I mean, just because
you have a bank account.
You have a bank account just because you've been with them unless you're like a gazillionaire. But even
you don't have a relationship.
Even Ryan Coogler, who's a millionaire, didn't have a relationship with his bank. Okay, do we need to go there?
Yep.
Like they thought he was trying to rob them or whatever. So the point is, you may think you have a relationship with your bank and you want to go with your bank. You can use whatever lender you want, but just know that your bank does not know you. And they don't necessarily, see you as a person. They see you as a number, and they have bankers' hours. That's where bankers' hours came from. They don't work on the weekends. They don't work after 5 o'clock. So that's why we try to introduce you to our lender partners, because we know how they work. We know their communication style, and we know that they have a proven track record of closing people. So that is very important, if you're a buyer and you're wondering why your agent is, you feeling like they're steering you, that is why, but you can use whatever lender you want. One thing I wanted to circle back on was you mentioned that it has been pre-underwritten. All lenders do not do this, and that's another reason why I like working with you, is because, and even for me, when I was buying my house, I can't believe how nervous I was. I do this all the time. I've been licensed 8 years, going on 8 years on the 13th. What's that? A couple of days, 2 days from now.
Yeah.
And, I do this. I'm always calming buyers down. I'm like, why are you tripping? You got it. It's good.
Right.
Listen to, LaShonte says it's good. It's good. LaShonte was telling me it was good. And I'm like,
are you sure? Really? Are you sure?
I was my worst client. And so, but what gives me comfort, and so the thing is, what normally gives me comfort is a pre-underwritten file. However, we found my house before I had a chance to do that. I didn't really think I was really ready, but I saw this house, loved it, and was ready to make an offer. And we hadn't been pre-underwritten. So that was my nerves, because I also, during that time, we couldn't have a long due diligence period, if I recall. And then I was doing something called Ribbon, which they kind of help you. They helped us to be able to offer an amount higher than the list price, without being really responsible for it if the appraisal didn't come in. So there were a lot of things involved, and I wanted to be able to do that or have that information within like a 7 period. But because I wasn't pre-underwritten, it was nerve-wracking. So it was just a lot going on. But all lenders don't do this, but I recommend a lender that does, because what that means is, so the first layer that I find reassuring with loan officers, or if I'm interviewing a loan officer, is their main job is to understand the mind of an underwriter, right? So what they do is they get all of your information and they put it in a beautifully packaged package, loan package. I'm paused due to poor connection. Okay, hopefully y'all can see me. I know that Comcast has been doing work on my block, so hopefully you guys can still see me. But what was I talking about? I just forgot.
The pre-underwrite process.
Oh, the pre-underwriting. So all lenders don't do it. But all lenders at the base level should have an understanding of putting a loan package together in a way that's going to anticipate any concerns and any questions that an underwriter would have. They need to package that loan in a way that the underwriter don't have no questions. And that the conditions are very minimal, like minimal conditions, like, oh, you need to provide a divorce decree, something like that. It shouldn't be conditions like, oh, you need another $40,000 to close. Like, you should already know that as a loan officer when you are consulting with the buyer. And so the reason why you have pre-underwritten, that takes it a step further. If it's pre-underwritten, then it has been already seen by the underwriter before you even get a contract. And so that gives so much more reassurance that you're going to close, because unless you, God forbid, lose your job or something like that, you should be good to go. So is that correct assumption with regards to underwriting?
You hit the nail on the head. So our goal, and this is 8 years of, I just hit 8 years on April 20th. So this is 8 years of building a system and, perfecting a process, learning. So the goal really is when we get a contract, all the underwriter has to do is underwrite that property. So buyers should be as good as can be. And now we're just looking at appraisal. We're looking at title. So not every file goes in front of the underwriter, but we, my team, we have over, several years of experience of looking at a file from an underwriter's eye. So we're going to get everything that an underwriter might ask for. Like you said, we might need a divorce decree before we send a pre-approval, because we've known, what questions to ask. We can look at the file. And the reason for that is to protect.
Uh-oh. Oh, no. We lost her. I'm going to give her time to jump back on, but we were talking about being pre-underwritten and the reason we do it. And it's really to not only protect the buyer, because, it's one thing to go through the pre-approval process, but once you're under contract, you're under a binding legal contract. And now you have money on the line, because when you go under contract, within a couple of days, the buyer needs to submit earnest money. So, now there's money on the line, and earnest money is like 1% of the sales price. So, and the average or the median home sales price right now in Atlanta, where we are, is $420,000. So we're talking about $4,200 that is on the line. So even though it may take a little bit longer on the front end, it is always recommended to go ahead and get pre-underwritten, and that's up one step further from a pre-approval. The least amount of protection that you'll have is a pre-qualification. The pre-qualification is just basically where a buyer fills out the application and the lender gives the lender permission to run their credit. The lender runs the credit, and a pre-qualification is basically just credit approval. It does not take into account whether or not the information that you input on your application regarding income is correct. So with that being said, you definitely want to go further than a pre-qualification, and then you definitely want to take it a step further from the pre-approval even, just to have that level of protection. So let me see here. I've got some comments. Okay, he said he's going to get her. So let's see, what else can we, if you guys have any questions, let me get a fire emoji if you are getting some good info off of this stuff that we're sharing. Also, be sure to collaborate with us. Give us some questions to answer, whether you're having questions from a buyer's point of view, a TC's point of view, or an agent's point of view. We have a wealth of knowledge, and we're happy to answer for you as we wait on LaShonte to get back on this call. I hope she's able to get back on. So some other things that I was going to talk about, if you're just joining on Instagram, unfortunately, you can't see all of us on Instagram because I'm using StreamYard and it doesn't work on Instagram. So I pinned a link to our YouTube live channel. So you should be able to click that link and be able to see more of us when LaShonte finally does get back on. Let's see, we were going to talk about, okay, so she was kind of telling us about the timeline, I think. And so she mentioned once we go under contract that they go ahead and order the appraisal. So how we work with her team is I also have automations as a TC in my business. And if you're an agent without a TC, then you're a TC yourself. So agents generally will have they'll follow up as well. So the way that happens is, she's joined us. Hey, LaShonte, she joined. What happened?
Oh, can y'all hear me, see me?
Yes, I can hear you.
I am so sorry. I'm like, it was just getting good.
I know. So do you remember what you were talking about? I think you were talking about the contract to close process, right?
I think we were talking about the underwriting piece.
The pre-underwriting.
Okay.
Right.
Okay. Yes. Thank you.
Okay, we're back, y'all.
Okay.
So let me just remind them, if you're on Instagram and you just joined us, you can also click the pin link for the YouTube live so that you can actually see LaShonte. So make sure you do that. Okay, take it away, girl.
Okay, so I was saying, like, the pre-underwrite really is to protect the buyer. So our goal is to protect the buyer's earnest money at all costs. So we pre-underwrite this file to make sure anything that could come up, we catch it before you're ever under contract. And we want to protect the agent, the agent relationship, the agent. Our job, the both of us, is to make the agent look really good, to make the agent shine. And the pre-underwrite really eases a lot of the borrower's tension and apprehension. Anything that they may be concerned about, we can ease that by underwriting the file up front.
Yes. And I said that while you were off. And, it just, like you said, once you go under contract, you are under a binding legal contract, and you now have collateral. You have at least 1% of the sales price. And I was saying that the current median sales price in Atlanta right now, which is where we are, is $420,000. So you're talking about $4,200. So we, as a whole, the whole team, we work with the agent as a team with their buyers, and we're helping the agent stay on top of these things. And so, like I was saying, that front end can take, back before you all started doing pre-underwrite. So I think, did y'all start doing pre-underwrites in 2020 or before then? I think y'all always did them, but they got popular.
I think so. I have, it was, we may have been like one of the only teams that did that in the beginning, but then I have started to hear it become more common, like during COVID and when things were extremely competitive. I saw a lot of lenders adopt that, to make the offers more competitive. But really, I started to do that to protect the buyers, because the thing is, in this industry, there's not a whole lot of formal training, so you kind of learn by making mistakes. So in the beginning of my career, I always said, I'm not going to be responsible for somebody losing $3,000-$4,000. So we adopted these systems very early on, but at the height of COVID, when things were super competitive, lenders did start doing pre-underwrites just to shorten the close time, the amount of time you need to close.
That's right. Okay, pioneer. But and so that also helps agents to craft their offers. So like she was saying, during COVID, if somebody is telling you to forego having a finance contingency, then what are you going to do? Like, you need to do that. You need to have a pre-underwrite if you're going to, have the buyer out here willy-nilly, not sure if they're going to be approved. They can think they're going to be approved all day if they didn't realize that they had college loans. I had a deal where, and I didn't know about this either, the Cavers report. I had a deal where she was she wasn't with NACA, but she had her own lender. And again, I just use whomever they want to use. If they don't want to use my person, again, it's the buyer's choice. And they approved her, gave her pre-approval. And I don't know if y'all do this, if y'all check the Cavers report or not normally, but I had never even heard of the Cavers report. And so what it is it's a report that is able to check college liens. Are they liens?
Well, it's federal.
Federal liens.
So if you have a claim against you, any claim that's federal, you can't get FHA loan. You know, that's federal money. So yeah, the CAVER. So a lot of student loans are, you know, federally backed. So if you don't pay them, they will put, you know, a red flag on you.
And she thought she had paid all her loans, she said. So I believe she thought that. I can't remember everything, but we were under contract before this was found out. So again, with, you know, having a pre-underwrite is even taking it further than even a pre-approval. So we love that. So good. That's some great information. You guys make sure you're putting your questions in the comments. If you have comments or questions, put them in there. We would be happy to answer it. You have 16 years of experience on the phone.
Look at that. We veterans.
I can't believe. Okay, side note. I cannot believe that I am an entrepreneur full time. Did you think that you would be an entrepreneur? I don't know what you did prior to mortgages.
I feel like I've been doing this my whole life.
But what did you do before 8 years ago?
I was still in finance, but I was corporate. So I was actually a treasury analyst for John Whelan Homes. So similar line of work. But before I was full-time loan officer, I was a treasury analyst. And it blows my mind when I hear
I mean, you were a treasury analyst, you were doing something similar, but it was working for someone else, a guaranteed check. And decided you're gonna, you know, do it on your own. And 8 years later, we purchased homes. We've helped others purchase homes using, you know, income that we've made from our businesses. And it just still blows my mind. Like, I got my real estate license 8 years ago. It was to eventually work as an entrepreneur, but I started off thinking I was just gonna do it part-time. But I got into it also thinking that it wasn't as much work as it was, as far as just being all over town and stuff like that. And then I realized that I was like gone so much more than I even was in corporate America. And the reason I decided to get into real estate was to be more present for my family. And so I got into it. And then my mentor at the time was a young mover, shaker. She's like, you need to quit your job. And I'm like, girl, please, I'm not. I was just like in the back of my mind, like, okay, girl. But I'm like, I need stability. I can't see myself doing that. And to think 8 years later, like that same job, just only that income has, or that same business, just only that income has allowed me to do so much. I'm like, I don't think I'll ever go. Knock on wood, because I mean, if I got to go back to work, I got to go back to work. And with the way this inflation and stuff been going, it has been looking a little.
It's tempting. It's a little tempting.
It's looking a little like, you know, because another thing is, over the last 8 years, we weren't in our businesses when the crash happened in like 2008 through 2011. We weren't entrepreneurs yet. And so since we've been in the business, it's been steadily going up and up and up until kind of now it's kind of like, okay, what y'all gonna do? What we gonna do? You know, is something happening? Are we having a recession? You know, all these talks. And so that makes it a little nerve-wracking. But again, we've established so many systems and procedures that will hopefully carry us, you know, and you know, continuing to trust what we built and trust the process. So what do you think about that?
And trust who, you know, to get a little religious, but and trust whose we are, right?
Absolutely.
Beyond the real estate market, which is always up and down before, like you said, we even got in it.
Yeah.
We're not here by mistake. Neither of us, you know, we haven't learned all we've learned. God didn't bring us this far to just bring us this far. So just reminding yourself of that, you know, every day is like, this is what you were meant to do. You love this. This is your passion. And if that means, you know, getting more creative, being more present, we're just going to, you know, do what we have to do and put the work in order to see the fruits.
You know, the funny thing is, you say getting more creative, but we both have talked about this. We need to get more creative. We need to go back to the basics and do the basic stuff. Like, you know, in my classes, we talk about marketing. Everybody's so concerned or have so many questions about how to get clients, not realizing when I tell you to go to your sphere of influence, and when I tell you, like, it sounds so basic and you're like, it's got to be something more jazzy or more fun or better. No, it's really not. You need to pick up the phone and call or text people. You need to communicate with people consistently. And that is the way to go. And we always think there's something more, like, oh, we need to run ads, we need to pay for this, we need to buy leads, we need to do that. No, the first thing you need to do is take it back to the basics and pick up the phone, right?
And I'm preaching to myself.
But me too. That's the hardest thing as business owners and what we do. Like, we want to just kind of do everything, you know,
but the work.
And really, it's the way that we're saying to do it, going back to basics, is the cheapest, is the least expensive, and it's the easiest, technically. But it's not necessarily easy for introverts like us. I feel like you're kind of an introvert too. I feel like
I'm like the most introverted extrovert. It's like people get very surprised. You know, I'm really like a super introvert. Like,
yeah, same.
You know, yep.
So, you know, people get it mixed up that being an introvert means you're antisocial. No, you're social. It's just, it takes a lot of energy out of you when you're being
yep.
Like doing this live, I'm gonna need a drink or a nap or something because we got so anxious even just in preparing for the live, you know.
We didn't have to tell them that. We didn't have to tell them.
It's an anxiety thing for introverts.
But the good thing is that we push through it. And I think that's the lesson in it, is even getting back to the basics. Push through it. We don't feel like it. When you don't believe, just do it anyway.
When we can't see LaShonte on Instagram.
Yeah.
You can hear her, or you can get on YouTube, or you can get on my Facebook channel and you can see LaShonte. But I'm still gonna come on Instagram. Right now, there's nobody on here right this second. But the people are coming in and out, and people, you know, if we keep the replay up, they'll watch the replay. But whether they do or not, we owe it to our businesses, and we owe it to the people that are interested to give this information. So that was just a little sidebar, a little business. I hope y'all caught that tea. All right, so I don't want to keep us too long. So we talked about the timeline. So let's talk about some common challenges really quickly. Common challenges that come up during the process on your end, and then I'll kind of
I was gonna say, I think we'll probably ping pong this one. Like, I'll think of a common challenge that we may face, a low appraisal.
Yes.
Right. So a lot of people, you know, synonymous with the real estate agents, usually when a realtor refers a lender, the borrower fuses us together, right? So they're like the lender and the realtor, whatever the experience was, they fuse us together. The exact same thing with the appraisers, right? The appraisal comes in low and automatically it's the lender's fault. But a lot of people don't know appraisals are ran through a third party. So we get an appraiser in, the value comes in. If it comes in low, that is one of the things, you know, one of the most common hurdles that we have to get over and get past. You know, our team will collaborate with the real estate agents to look at the comps, review the appraisal, and you can submit what's called a rebuttal of the value. So if you don't agree with the value, we can go back to the appraiser and say, hey, revisit this. This is why I think you're wrong. You forgot these comps. You didn't include this. And a lot of times we can get a reconsideration. And I've seen several times where the appraiser will, you know, revalue the home. Sometimes they'll come where we need them to. Sometimes they'll meet us in the middle. But collaborating with the real estate agents to get that reconsideration submitted is one of the ways we can overcome a low appraisal.
And so wearing my TC hat with the appraisal. So that's one of the things that we track. One of the not many things. There are like 4 or 5 major milestones in the contract that we as TCs track. It's the earnest money due date. It's the due diligence due date. It's the finance contingency date, and it's the appraisal date. Depending on the type of loan you're getting is how you handle a low appraisal. So for instance, if you're an FHA buyer, the appraisal runs until the very end of the transaction, of the contract, until it closes. So I've never really seen anything happen with that. But like, you know, I guess if it's the day before closing and y'all still haven't come up with an agreement, I guess, you know, the buyer can then terminate the deal. Now, this is in Georgia. It's, you know, every market has differences in how things are worded. For instance, as far as I know, with the transactions I've done in the states I've worked in, Georgia has been the only one that has a separate appraisal contingency from the finance contingency. Most of them roll the entire finance contingency, and you better get your appraisal in there somewhere and figure it out. And then also with contingencies, finance and appraisal, there are, if you're an FHA buyer, you don't have to do much. You can just submit an amendment to change the sales price. If it's a conventional loan, there is specific language in the contract that you need to adhere to just right. Like, you know, the buyer has to submit this amendment to the sales price before the appraisal contingency. And then the seller has like 3 days or however many days it says in the contract to respond. And then only then, if nothing has come up, then only then can the buyer terminate, or if they can't come up with a new sales price. So you have to know your contracts. Now, as a TC, all TCs aren't licensed. But what we do is we help the agent. The agent still has to agent, you know. So as a person that's licensed myself, sometimes it's hard for me to separate, or it used to be sometimes hard for me to separate the two, you know, my agent hat from my TC hat. And that's actually one of my superpowers with my clients is
I was going to say that.
Yeah, I'm licensed, as well as I take contract classes every year to see what's new, as well as I've seen probably more transactions than most agents because I deal with several agents at a time and several contracts at a time. So I've seen contracts come back from the dead. I've seen all kinds of things where we have to revive, you know, contracts. So but that being said, that's why I like working with newer agents too, because I can kind of, you know, point them in the right direction as far as what they need to do. Because if you miss things, you know, just little things like that, you could put your buyer's earnest money on the line. So a low appraisal, when in Georgia, when there's a low appraisal in general, just on a macro level, we need to go back to the drawing board with the listing agent and the seller and submit an amendment to reduce the sales price to meet the value, because the lender is not going to loan you money over and beyond what the home is valued at. So if for whatever reason, and just in simple terms, if for whatever reason the buyer and the seller cannot come to an agreement on the lower sales price, the buyer could either bring the difference to closing, which we saw some of that happening last year and the year before with the frenzy.
Yep.
We saw a lot of that happening. And so what I was saying too, when I purchased my home, I was able to get with this program, who is now defunct, honey, because they were giving everybody money over and beyond the appraisal. But I paid a percentage to work with this company called Ribbon that would allow me, they gave me a value that they valued the house at, and it was above and beyond the sales price. And so I was able to make that offer without a concern that if it came in low, that the seller would be able to come to me for the difference. Ribbon would eat it. So that was a great program while it lasted. I'm glad it was there. I actually didn't even need to use it. My home valued higher than the appraisal, but still it was a level of comfort for me. But that is what will happen if you get a low appraisal. Let's talk about loan declines. Nobody wants to talk about that. And generally you won't, I have not had that happen ever with you. And then on the ones that I have seen it happen, to be honest, most of the time it's for something either unforeseen, the buyer wasn't aware, like that Cavers report, things like that. So tell us your experience or any horror stories you might have.
Yeah.
Loan decline.
You know, how can I say this? I think if you are interviewing lenders, I think a good question to ask is, what is your approval rate? So, like, based on the number of loans that you submit, how many of them actually get approved?
Uh-oh.
The declines that we've seen is 100% because of misrepresentation, meaning that the borrower was not all the way truthful about something on the application, or a property default, like the property just didn't appraise. And I think we're very fortunate to be in that position, and it is because of our processes, our intake, and our upfront. We do a lot of that vetting. We even pull cavers up front. So we're able to offer a approval guarantee. So any approval letter that we send, we'll put a $15,000 guarantee that this loan is going to make it to the table, less misrepresentation. So, like, for instance, you have a borrower who we had one, submit fake bank statements, things like that, which you cannot foresee. You get the paperwork, you verify it, and then down the line, it comes out that that wasn't the case. But that is very, 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 like, few and far in between. Can you recall some denials that you remember, like being an agent or being the TC? Like, what was the reason?
I really can't. I really can't think of any declines right now.
That's good.
Yeah. So what I was saying earlier, and what I've always been taught. I turned my camera around. I hope Sabu doesn't mind. For the Instagram people, he says no. So what I find is that, or what I've learned from my training, I take contract classes all the time to learn strategy and things like that. And the loan contingency is not for the approval. It's for the decline only. If we got a commitment, then that contingency comes and goes. It only comes into play if you have a decline. So generally what we're able to do is, remind the agent a couple of days prior to the contingency period and say, hey, reminder, this is coming up. We copy you, the lender. And we don't want to necessarily know, hey, is this loan approved? We want to know, do you foresee any issues with this loan? Because I think we talked about this earlier. A silent lender means a problem.
Yeah.
So we want to know, don't be gatekeeping information because you're still trying to make it work or trying to see if it's going to work. Don't do that. If there's any issues, let the agent know so that they can talk to the client about possibly terminating the deal on the strength of the finance contingency, and just, if it looks like it's going to be declined, just decline it at that point, because that's the only way.
And I think it goes back to remembering the intent. Like, what is our goal? Our goal is to protect this buyer and to protect this realtor's reputation. If you referred somebody to me, my job is to protect your reputation. So if we cannot get it done, we benefit nobody by not saying we can't get this done. So you never, ever, ever want a buyer to lose earnest money. And sometimes you just have to kind of, communicate that, hey, this isn't going to happen. And that's why I love working with you guys, because y'all will be like, hey, the financing contingency is up. Where are we? And that gives us and the agent an opportunity to go back to the seller and say, hey, we need more time. No buyer's going to lose their earnest money. So just a simple, hey, we're having an issue. Can you extend this financing contingency? That keeps the buyer protected. If the seller's not willing to do so, the buyer can walk away with their 1% of the purchase price.
Exactly. That's like you said, that's our number one. Obviously, our number one is to close. But if something happens, I did have something where we had to get a decline letter, but the agent on the other side, the listing agent, was kind of challenging it a little bit because, and this was a mentee that I was working with, and so her client was getting down payment assistance. And she didn't, we don't typically disclose that when we're making an offer. And so that was not disclosed, but they were going to be declined because of the down payment assistance or something. So the other side was really challenging it. I think we still ended up getting the buyer's earnest money, but that was a lesson as well.
Technically, you don't have to disclose the buyers where the money is coming from, but
Right.
Seasoned agents will call. I've gotten calls from the listing agent. They specifically ask, is the buyer using down payment assistance?
Yes.
So they know what questions to ask so that they're in the loop and that they are informed. But from my understanding, in the contract, you don't have to disclose whether or not the buyer's using down payment assistance.
You don't, but it was a gray area. I remember us having to contact a broker because, just because you're not able to get assistance, you said you would be able to buy this house.
Yeah.
Period. Is that really a decline? So it was a lot too, and I can't remember where we ended up with it, to be honest. I really don't remember. I'm trying to remember, but I feel like they got the earnest money back, but it was hairy for a minute because technically I feel like the listing agent did have a point. And that's another good lesson. If you're a dual, if you're an agent and you're a TC, or if you're just an agent that's on here, I know a lot of agents follow us. If you're on the listing side, you need to be calling the loan officer. I always do that. Especially last year and the year before, when people were offering moons and stars, talking about you're gonna offer us $30,000 more than the sales price. Okay, where's the money to prove that? Where's the money to show that you have another $30,000 above and beyond your approval? Because you're promising you're going to do that. Like at first, they were just promising it without any sort of, like they were just promising it, and trying to get the thing accepted. So that is a good point for agents. Make sure you're contacting the loan officer and kind of vetting these offers that you're receiving. Okay, so we're going a little bit long, so I want to make sure we get everything. So you want to share any technology that you use, not necessarily the names of it, but kind of, 7 days after the transaction, do you send something to the agent or to the buyer or things like that, the TC?
Yeah, a lot of our automations really come into play during the pre-approval process. Just like you said, nurturing that lead, staying top of mind, and making sure that we get them converted after closing. So our team, we do updates on active files twice a week. So a lot of that is manual and not a lot of automation, just because on our piece, there's so many moving parts. You have to check on the appraisal. You have to check on, this and that. But we do have follow-ups. So like, let's say an appraisal is due on the 15th. So we do have a check in place on the 14th to reach out to the appraiser. Hey, we just making sure this is going to be on time, just so that we can be proactive with the communication. If the appraiser sees that there's going to be a delay, we can relay that up front. With the title work.
Something happened.
Uh-oh.
Did we? Can't unmute you. Okay, you're muted. Okay, there you go.
Okay. I know Sabu said we're getting questions in the comments too. Did you see that?
Yep, I see.
But yeah, after the contract comes in, we do our twice weekly updates to everybody, so we're all in the loop. But a lot of our automations are internal. Do we have all the pieces that we need? And did the closing disclosure go out? There's so many things we have to have before that CD can go out. So we have a lot of internal automations that say, check this, double check that, triple check this, to make sure that we can meet those closing dates.
And so like on the TC side, we also, like, we're not obviously handling any part of your internal process, but 3 days before we do want to, or 5 days before, we do want to know Are we good to go for closing on this date? Has the CD gone out? For those that don't know, the CD is like a federal thing. It has to go to the buyer no later than 3 days before closing. So if it goes out 2 days before closing, you're not closing on the day that you said. It needs to be at least 3 days. So that's why it's important for TCs to follow up on that, because obviously we want to close, obviously we want to get paid. So we're following up with the lender and finding out, making sure we're good to go for closing. Let me look at some questions here. The information provided is extremely valuable. I'm thankful to both of you. It's helpful to learn the underwriting process. Thank you, Devana. I have one personally. It was a day before closing, and the lender realized I couldn't get an FHA because my other house in another state from which I relocated was also FHA. See, that definitely should have been a part of the initial conversation. Then they tried to switch to USDA at the last minute, and because my home was not rented for at least 2 years, they couldn't count that income. Yep. So the whole thing fell through before closing. Oh, that's so horrible. Of course, this information was not a surprise to the lender. They messed up. And you know what, to be honest with you, let me put on my buyer agent hat. When I am doing my initial call with a new buyer, like that's kind of, if they're telling me they're relocating, I'm asking, do they have a house to sell? Or if they were renting, when is their lease up? So that should have possibly come up then, like, oh, I have a house here, but I'm renting it. That's something that, I would probably relate to LaShonte if she was my lender when I'm sending her the lead. Like, hey, here's some information. She's relocating. She owns the house, but she's not selling it. That's going to raise the question to us to say, okay, well, what you going to do with that house? Oh, it did come up. Oh, yeah, that is a problem.
I just want to piggyback, Courtney, on when you were saying earlier, when you guys make a recommendation for the client to work with a particular lender, that's one of the reasons. I always say where there's no reputation, there's really no reliability. Because if a lender and a realtor have a relationship and the lender relies on that realtor, they're going to make sure they do a good job. Like I said, just to be honest, my job is to protect you as the buyer and to also make my realtor look good so that we can keep working together. Mm-hmm. So I'm gonna bet that was probably like an online lender or something like that where there was no relationship established. Because not to say that things don't happen and people aren't human and mistakes don't happen,
right?
But for things like that to go that bad all the way the day before closing is super critical to trust your real estate agent, especially when they're making a recommendation. Because if they do refer a lender, it is just to protect you. That legally we can't pay them or anything like that. It's right.
literally it's to protect.
Trust your realtor. Choose a realtor that you trust so that you can trust any recommendation that they give you.
That part. Trust is important. Trust is important as entrepreneurs. I'm not sure how many of you guys are on here that are aspiring TCs versus already in real estate, but when you're an entrepreneur, all you have is your word and your reputation, like you said. And a lot of times, a lot of the worst relationships are when you feel like you can't trust the person that you're working with. If you don't think they're smarter than you in this particular lane, which is supposed to be their zone of genius and their expertise, if you don't respect that or trust that, then you need to find somebody that you do trust, because it's not fair on either end. If you don't tell me how to do my job, it may not work. I'm the expert in this, and that's just what it is. It's not an ego thing, but we've done it more. We see it day in and day out, So she says, absolutely, that realtor no longer recommends that lender. I bet. So, you mentioned that. So like we have automation. So, like you said, you're working the day before the appraisal. Another thing that we do is about a week after the binding date, we'll send an email to the lender team, just saying, hey, we just wanted to get an update on the loan. Has the appraisal been ordered, and when is it due back? Everything that we ask and all of our automations are meant to gather information. So we're not just asking yes or no questions. We're asking open-ended questions. We want the information. We want the data. So we're asking, when is it due back? So that way we know, because sometimes I'll get a response that it's due back and it's like the day after the appraisal contingency. And I'm like, well, that ain't gonna work. Did you all realize, and so at that point, the agent will have to figure out what they need to do, if we need to do an amendment to extend or whatever. But that is why we do it. So we have stopgaps in place, the lender as well as the TC, working in tandem to make sure that the buyer is covered and that they have kind of a net, and the agent has a net there. So we'll send that to the lender the day of or the day before the contingencies. We'll send a reminder, hey, the appraisal contingency is tomorrow. Has it come in yet? Is it at value? Hey, the loan contingency is tomorrow. Do we have a loan commitment, or do you foresee any issues with the loan? And we're copying the important people on these emails, because, if one misses it, if your agent misses it, then the lender can see it. That way, if something is going on, it'll come up at that point, hopefully. Hopefully, if they're actually responding to their emails and watching their emails like they should, it'll come up at that point. So we have automations in place, not to take the place of a human touch, but just because we are human. Yeah. We can't remember everything, without an automation, so you need to consider that when you are a business owner, because if you miss a day, you miss a lot in this business. You cannot, you have to have an ongoing list, checklist of things that are due, when they're due, and things like that. You do have to be organized to do what both of us do. You have to have a level of organization. If you don't like being organized, then this might not be the business for you. Okay.
My favorite quote is, systems solve all problems.
Period.
Every meeting that we have, we're talking about, okay, what hurdles did we run into? What was an issue? And we're working on creating a system around that, to better the process, because systems solve all problems.
Mm-hmm. And that's how we come up with the procedures. And that's why, when I am coaching TCs, trust me, I have a system in place, a checklist in place for the HOA letter. And I need to add one too, if there's a condo, to get with you all in a very day one.
That's a good one.
Because if number one, all condos aren't even applicable to get a loan, like if it's an FHA, but the buyer's agent should be handling that with the lender, and y'all should be figuring that out before an offer is even made. But what people don't know is that even conventional loans, a condo can be declined, and most agents are not putting a stipulation in their offers for that if the condo is not approved. So there's a questionnaire that the buyer, I think, has to pay for, and it can be like $300 and something.
And it's really something that the listing agent should vet before they list the property.
But they don't.
And they don't. Right. But
I think the buyers have been paying, haven't they?
Yes, but in my opinion, I always felt like a listing agent, if you're listing this property, it's your job to do the due diligence, because sometimes the HOA doesn't get us that information for 10 days. Now, you've got these buyers under contract for 10 days. They pay for an inspection, when you should do your due diligence before you list it to make sure that this is a warrantable condo.
But at the same time, it's the buyer's job to do due diligence. So with that being said,
true,
the buyer's agent needs to, and this is from experience, this is learning from seeing this. The buyer's agent needs to put a contingency or put a stipulation in that offer that says due diligence. Maybe due diligence doesn't start until after the questionnaire is received.
And that's why I think it's good when choosing your partners, because with you on the file as a TC, you can say, hey, this is a condo. Yeah. Check with them to make sure it's warrantable.
It's not common. It's not common knowledge, and we don't have majority condos in Atlanta. Yep. We have majority single family homes. So all agents will not come across this. And that's what it's called, a warrantable condo. And that's with conventional or FHA. FHA, you can check before you put the offer in. Conventional, you have to pay for this big package that shows all the information that the lender needs. It takes a long time, and then your due diligence is gone, and you're risking your buyer's earnest money. So as a TC, just in this conversation, I just remember, you know what? I need to create a system when I have a condo to check or to get pretty much remind everybody. It's my job to orchestrate. So it's pretty much an automated email that just says, hey, I see this is a condo. Has the condo questionnaire been ordered? If it hasn't, that's going to get all hands on deck, whoever's job that is. It's not my job, but it's my job to help y'all out. Whoever job that is, it's like, oh yeah, you're right. We need to go ahead and order that. And then from there, I can see what I've sent out. I can have a timestamp and I can follow up. And in that way, the buyer is protected. So that is our example of creating a system around experience. Another thing is when a home is in an HOA, I already have this in my system. I've had an experience where, again, you're relying on a third party. The management company, they're the ones that handle the condo docs, and they're the ones that handle the HOA docs. And both of these cost hundreds of dollars for a few pieces of paper that the buyer generally has to pay for. You used to be able to select who pays for it, but these things will, they have to happen before closing. So with the HOA docs, they're just confirming, whatever information that we provided with regards to the cost, and they need those numbers in order to put into the settlement statement. So I've had situations where either the HOA docs were ordered late. This is done by the closing attorney here in Georgia, not the lender. You guys don't do this, right? The closing attorney.
We don't, but I've seen it be an issue before.
Yeah, I've seen it be an issue where we could not close because they didn't get the HOA docs in time. So after having that experience, I was like, okay, that needs to be a task list, and I need to be following up with that at least 10 days before closing to say, hey, have the docs been ordered? Do you have an update? And a lot of times, if there's an issue, because a lot of times these management companies are slow. Sometimes it's people that live there. It's like common citizens. They don't have a management company. They have an HOA president that's providing these documents sometimes, So in those cases, then sometimes the buyer needs to the seller needs to get on the phone and call, because they're the residents. They can get more information than what the closing attorney has been able to do. Sometimes they have to pay for a rush. Sometimes, but at least once I've sent that email out, it's put all hands on deck. It's put everybody on high alert. So that's how we come up with our tasks and our systems. And then finally, this is our last one because we've been on here an hour, girl. What makes a partnership successful when it comes to agents?
Trust.
That was what I was going to say.
Trust. Yep. Trust. I although I do think that my team is like the best lending team that there ever was, I'm not for everybody. We're not the best fit for everybody, and I understand that, and I don't think that that's a problem, right? That's just natural. But if we're going to work together, trust. You have to trust me, and I have to be able to trust you as well. Mm-hmm. Respect. I think that communication goes both ways. It's super important for us to make sure we're constantly communicating. Make sure you guys do this, do the same. Like, don't forget to send us amendments and addendums, or get a good TC that's going to make sure we
I
have
was gonna say.
the amendments and the addendum. Because, I mean, we've gotten to the closing table and the sales price is changed, but nobody sent the amendment to us, you know? So I would definitely say number one in a partnership is going to be trust and mutual respect.
Mm-hmm.
I'm interested to hear your answer.
Actually, those trust was number one for me, and mutual respect goes hand in hand with the trust. And communicative. And so what I do when I meet anybody new is I do a consultation, just like you do with buyers. If an agent calls you, I'm sure you all have a conversation. Both of you should, we had this discovery call series a couple of weeks ago where I went over how I handle discovery calls and what I look at them as. I look at a discovery call as discovery for both parties. Like you said, we're not going to be for everybody. So there are certain questions you need to ask to make sure that this person on the other end is not somebody that's going to drain you. That's not and draining happens when the person doesn't trust or respect you, or your boundaries, or your systems, and your processes. So if you can tell that in a discovery call, and it's okay if you're not a good fit, you can refer them to somebody else if necessary. But to me, my peace of mind is more important than the paycheck. And so also with that, this discovery call also gives you a chance to highlight your procedures. And so I find that the quickest way to, I guess, a failed relationship, whether business or personal, is unmet expectations. And if you don't lay out,
100%.
Your procedures, your expectations, what they can expect from you and what you would expect from them, then it's easy for things to get lost in translation when something doesn't happen that they thought should have happened.
Right.
So
right.
I in that discovery call, I'm going over everything, the good, what you might think is bad and ugly. Like, for instance, I have business hours. That might be ugly to a certain agent. I'm gonna go ahead and talk about that on a discovery call, because if you have a problem with it now, then just don't hire me.
And that goes into the communication piece. I think especially when you're newer in the industry, or maybe you haven't built up the confidence in yourself and your systems, you really want to please, and you are just very reactive. So there was a time in my business when I was like that, where whoever called, I was jumping, and now 100% my piece over the paycheck, because it's gonna come up anyway. So if I'm not honest with you to say, hey, this is when I shut down, and if it's not an absolute emergency, which 9 times out of 10 there is no absolute emergency where you need me at 9:00 at night, I will respond to you the next business day. Learning to communicate that, during the discovery call, like, hey, this is how I operate, and asking questions like, what are your expectations?
Right.
A lot of times an agent will say, I want, fast communication. Okay, what does fast look like to you? I need to really understand what you're looking for to make sure that we'll be a good fit for you. So that way there's no bad blood, right?
No unmet expectations. It's worse when they do call you at 9:00 and you never mention anything in your discovery call because you just wanted that piece of business. And then they do call you at 9:00 and you hit them with the I'm off, or you don't.
And they feeling some type of way because you didn't answer, and you feeling some type of way because they called you. So it's like, hey,
that was miscommunication and unmet expectations, and it's always getting me in the butt when there are unmet expectations. It always bites me in the butt. So that is a lesson that I would say for any business owner that's on here, is to have a conversation when a lead is first interested in you. They already interested in you, so you can tell them everything then. Don't wait until some other oblivion to mention, oh, by the way, I don't do that. Don't do that. It's just not fair. It's not cool, and it's going to mess up your reputation. So that is so great. I'm so glad that we were on the same page with that. Like we're always on the same page with most of our stuff, just how we kind of try to run our business. Like, I know some great loan officers, but a part of what I do respect about and I know they're capable. But if I feel like you're kind of fly by your seat and you don't respond to my clients, and I'm like, even within the same day or 24 hours, I'm cool with that. But like, it's some people, they're too busy and they don't have systems in place, and you can see it. And I just can't, send people to them all the time, so it's just what gets you as one of my lender partners, because sorry, LaShonte, but I know. Steering them to one person. I give them
we in a polygamous relationship.
but you're number one. Your link is number one on the list. So 9 times out of 10, people ain't gonna go to all of them. They're gonna pick the first one because they don't feel like it. But I do tell them that, when you're shopping for a mortgage, you do want to shop around. I mean, that's just, and a lot of times they will pick you because you can feel, you have to feel people out, and some people, most people these days, they want to work with the person. So once you get them on the phone, they're like, okay, I like her. So good. Well, do you have anything else to add, LaShonte? I'm gonna.
Oh, I thought we were frozen, but no. I mean, I think this was a super informative call. I appreciate you having me on. I think that we should do this more often. I respect you so much as a transaction coordinator, as a realtor, and I mean, I'm glad we were able to do this, and I hope that the people got something out of it.
Me too. Thank you so much for joining me. This is the first time I've ever collabed with anyone. Because I'm already nervous about doing lives as it is, and to have
Stop saying you're nervous. You're a natural.
I'm always nervous. You see, I literally have to read everything. So I really appreciate you doing this with me. And we will definitely do more. I want to do some where we're also talking about the real estate market, to appeal to a lot of the agents that follow us as well, and kind of some of the programs. We had a call last week about the down payment assistance programs and things like that, and just kind of things that we feel could be valuable. Like I believe in offering free information. I don't believe in gatekeeping information, but I want the information to be valuable. So if you guys are following us, make sure you DM us, and kind of, if you have any topics you want us to talk about, we're happy to do that. Before we head out, I do want to just reiterate and touch upon the Launch and Learn that I'm doing on Tuesday. It's 4 major keys you need to launch your profitable TC business in 5 weeks or less. I'm going to be using my MAPS framework. MAPS stands for Mindset, Attraction, Procedures, and Systems, which all 4 of those we've talked about today. And I'm going to help you. I'm going to tell you how you can launch your business, but also how you can work alongside me to help you launch your business. I'll be going over also my TC Playbook, which is my coaching program, which is a hybrid program where it's part self-led with the modules, but you also have access to me, who's an expert in the TC business. But the main thing that I want to share is that in honor of Mother's Day, I'm going to be giving away a scholarship for the TC Playbook. One lucky mom is going to be able to have access granted for free. And this is valued at $1,997. I'm going to be gifting this to one special mom. So actually, that's the wrong one.
How do they
do Launch and Learn? It's the tcplaybook.com/launch and learn. Or you can, if you're on Instagram, you can just comment the word roadmap. But if you're not, Sabu is going to put the link up. It's www.tcplaybook.com/launch and learn. Okay.
How does the mom enter to win the scholarship?
So all they have to do is attend the Launch and Learn and stay until the end. I'm going to be announcing it at the end. It's whoever is
that.
Going to be pulling names, and
I love that.
one lucky mom is going to be able to work with me to launch their own TC business. This can be the year that you change your life. My TC business, like I said, worked with LaShonte in 2021, purchased my home, which was more money than I thought I would ever be approved for, even when I was working in corporate America.
So proud of you.
Got the house that I wanted. And it was all because of this business. And so I know y'all saw my son, my kids, they always trying to kind of on a low be in my business, be on my lives. But my son was just, look at him. So, but I'm able to work this business with my kids around. The reason why it was so important for me to launch the TC Playbook when I did at the end of 2020 was because of the ease that I had to transition when my kids couldn't go back to school. We got a call on Friday, hey, the kids aren't going back to school. We don't know when they're going back. It's going to be indefinite. There was no anxiety for me because I was already home. I didn't have to figure out any logistics for my kids. They homeschooled while I worked, and my business did not suffer. And I made enough money for that year to be one of the years included in my taxes for me to purchase a home. So that tells you right there that nothing stopped. And I had my systems in place and I was able to do both. And so I just want to encourage all the moms that are looking for something that's flexible, that they can work from anywhere. And if they are interested in the real estate industry, but don't necessarily want to have to drive people around or don't necessarily want to sell real estate, then you guys definitely need to join me on Tuesday. The Zoom will be at 7:00. If you put roadmap in the comments and you're on Instagram, you will get a DM with the information to register. You have to register in order to get the information for the Zoom. So make sure you do that. And I will see y'all on Tuesday. Other than that, I think we are signing off. We appreciate you guys for being here with us, and y'all enjoy the rest of your nights. Bye.